Okay, welcome everyone. I'm going to get right into the trade setups and the stock market technical analysis. We have the Fed minutes coming out here in about an hour, so we'll get to kind of read into what the Fed's thinking for the future, and so we'll talk about that, and we'll get into the charts. I'm going to look at tech. Lots of different setups going on, but with the Fed minutes kind of coming up, we just have to kind of wait and see how the market's going to react. It's not necessarily what the Fed says in their minutes. It's really how the market treats that. So what does the market do after? And then the other thing, just to point out, guys, after a Fed event, whether it's a meeting or minutes, there's usually a lot of volatility, and it's not always the first move. You'll see these big moves, the algos kind of take over, and it's just, you'll see a big move up, a big move down. It's really choppy. So oftentimes it makes sense to kind of just let the dust settle a little bit, just to see where the market really wants to take it outside of that kind of that intraday volatility. So just a little update there. If we see a move kind of going against our short position, I think it's important to take it with a grain of salt. Those moves are designed to shake people out, and oftentimes that move will be faded. So just something to look for in case we get that. I'll point out what I see in the charts. Guys, real quick, if you're new and if you don't understand the concepts that I'm talking about, take my technical analysis course. Go down to there should be a link in the description below. So if you look at a video and click that little more link that has the description of the video, you'll see the link down there for the course. So check that out. It's not free, but I priced it affordable. If you're interested in trading and interested in learning how the charts work within a stock market, then I think that course can really benefit you. And I priced it affordable. So check that out if you're interested. Next up, if you haven't joined the private membership, go ahead. You'll see this little join button over here on my channel. There's a join button there, or if you look at any video, there should be a join button next, kind of where the subscribe button is. If you haven't subscribed, obviously subscribe first, but then you'll likely can join if you're interested. I am putting commentary there, and I'm a little more reactive in there. I'm able to post some stuff a lot easier and quicker than waiting for these videos to come out every day. So if you're interested in that, join up. It's $5 a month. At the end of the day, it's not a lot of money. But that does help out, and also hopefully you're getting the value out of it as well. So plenty of people have joined looking for more. So all right, guys, that's it. Triple Qs. Now, what do we got going on? I'm going to start out with the futures today. Nasdaq futures. They were moving around last night. So here's what we got. All right, we have a bearish rising wedge. This is an hourly chart. So we've got bearish rising wedge. Yesterday, we had the breakdown and we had a back test. That's basically all that happened yesterday, was kind of the breakdown and back test. Overnight, we drifted sideways and started to sell down today. So that is basically it. The breakdown, the breakdown that we got yesterday was the sell signal that basically is, playing out so far today. Now, again, the market's likely going to go into holding pattern, and we could see some spikes up after the Fed and then maybe moves down. There's lots of things that could happen, but again, we did get the breakdown, and we are seeing profit taking ahead of the Fed. Okay, so that's really it on the futures that I want to point out. On the Nasdaq, on the triple Qs, if I go, really at the hourly chart here, I've got a potential trend line right here. It's not really my favorite, but I had it. But basically, bearish rising wedge, very consistent with what we saw in the futures. And then, again, a breakdown or a sell signal right there. And then just a series of back tests yesterday. It was a kind of an automated grind as we were back testing, but nothing changed technically. We had the breakdown and we were back testing. And sure enough, boom, selling it down. That breakdown, there's more downside, basically, that was signaled from that breakdown. So the other thing to point out on the daily chart now is we're back below that 330 area. So there's 330. Again, if you guys remember back in June when I was looking to go long, looking for a tech rally, looking for this rally that we basically got, 330, it was about 329.80 or something like that. But basically 330. That was my final target for this bounce. and we got above it just slightly, but boom, right back below it. So it's kind of funny because I get a lot of subscribers who talk about, you know, how I'm just getting obliterated this week, or, you know, this week or whatever because of the shorts. But at the end of the day, guys, my final target was 330. We got above that by about 1%, you know, about 1%. And we're right back down there. So again, you got to give your trades a little bit of wiggle room, right? When I call a level, I'm not going to say that I'm going to hit it to the penny and that's exactly where we're going to reverse. We got to give our trade, the levels are areas of resistance where you're likely going to see, you know, there's going to be some stop rate action. You're going to have little pops above that, run some stops, things like that. That happens all the time. So you got to give your trades a little bit of wiggle room. Sure enough, back below it. Now, where do we go from here? From my perspective, if I look at the weekly, we have this downtrend. There's kind of, you know, in the short term, I don't exactly know where we're going to go, especially after the Fed. For one, I've got this downtrend line. I'm going to get rid of this one, but I've got this one right here on the weekly. You can see resistance. We started it here, resistance, and we're basically right there. If we sell off to close the week and we're back below this trend line, say below 326 on the Qs, and especially especially just not right on it. If we're clearly below that level, closing back below, then again, this was just a bull trap, a false breakout right here on the week. And intra-week, we were trading above it, but now we're back below it. That will be very bearish. That will tell me that that was likely the end of this bear market rally, and we're going to move lower. At least, at a minimum, we should move down to this trend line down here, about 301 right now, 301.50. Okay, so that's what I'm looking for to see if that plays out. The other way that this can go is you obviously have the 200-day simple moving average right here above in the triple Qs, and that's sitting at about 341-ish, and maybe they want to have a final push up to that, hit that, and then reject. Okay, I'm not really leaning that way. I'm actually leaning this way. I think we come down and hit this, then maybe push up and hit the 200, which might come in at about that 330 again. Yeah, that's kind of, it can go either way. And again, I don't know in the short term if we're going to run up and hit the 200 or if we're going to go down. The negative divergences that are in play, if you go to they're kind of starting to show up on the daily, but definitely on the hourly for triple Qs. The negative divergences that are in play right now are telling me that we're not going to push up and hit that 200 SMA. We're actually going to break down, hit the support line, and then we'll see what happens after that. Okay, so that's the way I'm leaning on that. Small caps here, you can see on small caps, it's created kind of this bearish rising wedge, pretty programmatic looking grind higher, where it was basically just the algos running things. Not a lot of volatility, just this really kind of slow grind higher, consistent, with really no volatility. Well, we're breaking down now. You can see we're kind of breaking down. So after the Fed minutes, do we push up for another back test? That's possible. If we do that, it's just going to be another divergent high and a very objective area to short. So I'd be looking, if you get that, that's an objective area to short, say up to about 202.50-ish. Somewhere right in there. Otherwise, we should break down. I think I'm leaning towards breaking down and not doing the back test. But you never know in the minutes after a market moving event, the volatility is really high. You can get these big spikes. Okay, so on the hourly, big negative divergence on the on the PPO, it's definitely big. On RSI, it's a little smaller. Kind of took it out. This little spike right here kind of took out the former divergence, but we got it right there. And then on the daily, not much there on the daily, but so we'll see. Again, the daily, we're at the 200-day simple moving average. This is really the max bounce target where I don't think we really should go above. The IWM, I think we saw the highs yesterday, to be honest, in the IWM right there. And I do believe we're going to head lower from here. That's the way I'm leaning. We'll see. Oh, just real quick, going back to the triple Q, something I'm going to be looking for, that 330 level is, to me, looks like a kind of a key level of resistance. And because we're back below it, you can see they're kind of stepping in to buy a little bit into the minutes here in the next half hour. Maybe what we get, and this is what I'll be looking for, is after the minutes a spike right up to that 330, and then it should reject right there. So I'd be looking for boom, hit up right up to 330, boom, reject, something like that. All right, so we'll see, but keep an eye out for that price action. The thing is, if I see that and I see it hit 330 and then I see the seller step in, it just tells me, okay, I am correct, or at least today, in the fact that we are going to reject at 330 and likely head much lower. So just looking for that. Now, if we run above 330 and it holds and can start to build, we'll see. Maybe I'm wrong there. Maybe we are going to run up and hit that 200 simple moving average up there at that 340-ish level. Oil. So here's oil futures. Bullish falling wedge here on the hourly chart. You can see we've got this kind of bullish falling wedge there. Bullish divergence on the momentum indicators right there. All right, we're right at that area of resistance. So we'll see. If you get the big green candle there, that's a breakout in oil, and that's telling me that oil is likely going higher. The measured target on this one would be something like, we'll say up here. Let's see, the measured target, oftentimes you can take it right there. Could be all the way up here at about 92-ish. We've got some resistance up here at 93.60. So in general, I'm just looking for, I'm not really interested in trading oil right here and now, but I am looking for confirmation around the price action. If oil continues to rise, that's going to continue to put pressure on the inflation trade. Or again, it's going to continue to there will be inflationary pressures in the economy, which you should see in the CPI, which will continue to put pressure on the Federal Reserve to hike. So just want to point that out. And here's a trade idea. Again, I pointed this out in the last, maybe a week or so ago, but NIB, it's a coffee, cocoa commodity. Again, downtrend line, we've got resistance kind of on this trend line here. This is a daily chart. And a little breakout there, but kind of a false breakout. Look what's going on today, though. Starting to break out. And it's right before the Fed, so we'll see. But it's definitely starting to break out. Bullish divergence on the daily chart. So, again, if you continue to break out here, that would be a buy signal. And we should run up to probably the 200-day moving average in about 27.50, somewhere right in there. That would be a move up from where we're at now of about 7-8%, possibly obviously a lot higher, but just want to point that out. mRNA, so I just want to point something out here. I don't have a trade on it, but I just want to point something out. You've got this downtrend line, so resistance, and then you can see it was kind of grinding along that resistance right there. Finally broke out. Okay, big breakout candle. That is definitely a breakout candle. All right, that's got a buy signal and a breakout candle. But the thing is that breakout occurred with negative divergence on the daily chart. So see it right there, boom, PPO. That tells me that this breakout has a high probability of being a bull trap. And again, it's just another sign that it's just another stock that tells me that we're probably going to get a bull trap. And so I don't take breakouts with negative divergence because they have a high probability of being fake outs. And sure enough, so far, it's selling down and faking out. Now, as of right now, it's a back test of that trend line. But again, that negative divergence there tells me that we're probably going to gap down and sell down, and this is going to be a bull trap. Okay, so I want to point that out. MELI. Again, this one, nice clean downtrend line. Breakout here. The breakout, didn't really have negative divergence on the breakout, but once you broke out and gapped above here, we've been kind of grinding higher, and this high price action here is negative divergence on the daily, on the RSI, and on the PPO. I think it's on the hourly. So negative divergence there tells me that we're likely going to see a gap down somewhere right in here, and this is going to be an island cluster top reversal, aka bull trap. So we don't have that yet, and if I see it, I'm going to point it out. But again, I want to point it out to you guys in advance in case it's a fast mover when it happens, or if it happens. LLY. So again, earlier this morning, I pointed this out in the membership, and I'm just getting it to it now in the video. So if you want a little bit more timely updates on kind of what the market's looking like, join the membership. I think it will well cover its cost. I put you on one winner and it's going to cover its cost. Okay, so LLY, big. What I got here, bullish rising wedge. Okay, bearish rising wedge, bearish divergence on the daily, big, huge divergence. So it tells me that we're likely going to see a big move in this one. That's going to be a kind of a trend trade. And sure enough, sell signal the other day on August 4th. Today, back test right there. Boom, back test and objective area to add or initiate a short. Okay, it's not my, I'm not recommending anything, but the analysis that I'm doing on the charts tells me that that's an objective area to add to the short. And looking for, we're basically from this area, we're looking for this. All right, now it's not going to get there straight down, but you're going to zig and zag, but basically work our way down to 283.70. And I did add a little bit more to this short trade today. I kind of have the full position in this now, so not looking to add any more at this point, just looking for this to start to work. Gold's coming into some support right here at about 1755, so we'll see if we get a bounce off of that. You know, I don't have a good read on gold right now. The miners look a little bit more readable in terms of the chart. Here's the GDX. Kind of, to me, looks like we're possibly going to come in for that back test I talked about. So basically run down and hit this. If we do that and get down to about 23.90, 24, somewhere right in there, that would be an objective area to go long because, again, this is a bullish falling wedge. We had the breakout. Coming in for a back test would be objective to go long. On the daily, we've got bullish divergence that's been building for a while. So that would be just a new divergent low and a back test of support. So that's the objective area that I'd be interested in adding or going long GDX. And I'll just be watching for that. So if that happens, you know, if we have a pretty impulsive sell-off down there, then the miners are obviously going to sell off, and because this is a ETF of miners. And then we'll look for, you know, objective longs on maybe some individual miners. So that's what I got on that one. And guys, that's all I got for this morning. So I'm going to get the video out so you have time to look into it before the Fed. And we'll follow up afterwards if anything gets crazy. All right, bye.